All right, Candle Range Theory Trader back with you on another video. Just looking at some missed momentum trades that we missed this week. Just a midweek check-in. Today is Wednesday, March the 5th. So I'm just going to take a look at a few trades. I'm not sure if I took any of these or not, but either way, when you know better, you do better. And part of this is for myself and anyone else who's following the journey. So let's get into it. The first trade that could have been taken was a momentum trade on Aussie Yen. All right, for the week. So we always start with our first step, which is finding a range. Okay, finding a tradable range that is an ATR candle. So, and if you don't know what the ATR candle is and the candle range theory, etc., what you're going to want to do is just take a look, or if you don't know what a momentum trade is, video links are in the description to explain all of that. This is a review video, but if you don't know those terms, you're going to want to look at those video links to get yourself caught up. All right, for everybody else, let's go. All right, so we had our weekly open back here on Sunday, Monday, 5 o'clock. Week started down. Okay, here's our ATR range right here, this blue candle to signify a long, a long bias. All right, so this was on Monday, 77 pip body. The total range from top to bottom was 132 pips. All right, so that's how that worked out. Now, we know with momentum trades, our ideal setup is that you want to see price break below the range. All right, break below the range, then close back inside of it. Now, the close back inside came on Tuesday, so the range was established Monday, and then Tuesday was the actual trading date. I'm not sure if I think Aussie did have news, but I don't think it was around this time. I think this was just a strong move up. So sometimes there won't be an entry, but for the sake of this one, let's see if there was. Typically, we like to enter on the 1 hour chart. So let's see if there was an entry on Tuesday in the 1 o'clock hour. So we're going to drop down to the 1 hour. Reset the view a little bit here. Okay, so our best bet, I mean, it's a bit of a ways, but this candle right here, this is like the candle that said boom. But this candle here is 43 pips. Now, so obviously your stop loss would have been kind of sizable, but at the same time, getting in right here doesn't qualify on this candle right here, doesn't qualify because it didn't close inside the range. The first candle to close inside the range was this candle up here. So this would have been a 43 pip stop loss. And the take profit would have been, let me see I just want to see what the risk reward would have been. So if we enter here, okay, stop loss, we'll say about 50, we'll say 50 pips just to make it even, because we don't expect price to break back outside the range. And ideally, we're shooting for the top of the range. This would have given you, 1 to 9, that's not bad. That would have been a 96 pip win. All right, so that's the 15-minute view there. But this one, you pretty much had to get in like immediately. Now if you want to drop down to the 15-minute, I don't really teach that. For the sake of curiosity, we can take a look at that to see if we would have got a shorter entry or, a better sniper entry. It would have saved you what? If we move this down here, let's say if you get in, or even there was a close here. So you could have got in a little earlier. This was at 12:15 p.m. on Tuesday. So this could have given you a tighter stop loss on the 15-minute. We'll say like a 30 pip stop loss there. And then for that risk to reward, that would have been trying to find it here. That's a 131 pip win. If you took it like that, 1 to 4, that's pretty awesome. Okay, you don't see that every day. All right, and it's like I said, 130. So, if you want to drop down to the 15-minute feel free. It's just that sometimes with lower time frames, you get false signals. So because look at this right here, you had some closes above the range back here as well, and then price tank. You would have got stopped out here. If this would have been your stop loss here, getting in on this range, thinking it's going to continue up, you would have been stopped out. All right, but I always teach to follow the pair. All right, so this would have been a better entry right here, and then ride it up. Okay, so that was that one. So let's go back to the 4 hour. These are all our winning long momentum trades. So next we have pound dollar. Now, even though you'll see how price really took off, I don't teach breakouts for now, at least. Like, I do have some stuff coming later with that, but for now, I'm looking at just trading inside the range up to the top of the range. So this pretty much was the same setup. And I don't, let me see if I mentioned the day for Aussie. Yeah, I did. Okay, that was a Monday range, and then Tuesday was the payout. All right, so with pound dollar, same process. Where's our starting range right here? It's from Thursday of last week. So remember, you always give a 2-day window. So this is Thursday. By Monday, we like to see this trade work out, and it did in the 5 a.m. hour. Okay, so this was last Thursday. So you just watch the range, and I only take the most recent range. If there was another blue candle that would have formed in here, then I would have went from that one. But I don't like seeing another one blue and then another blue. No, these got to stay black to make sure that price is really consolidating. So we just, let all the longs get trapped. I'm sorry, let all the shorts get trapped down here. And we want to be entering over here. So this was the same pretty much. You're out in 4 hours on this one. This total range was 57 pips. So let's drop down to our 1 hour to see where a good entry would have been. And it would have been right here at 5 o'clock a.m. Eastern Standard Time on Monday. And you would have been out in 3 bars, just straight rise. That's what we like to see. Let me see if there was a little bit of drawdown on this one. I can't tell. Move this out the way. No. And see, that's the power of the momentum trade, is you just want to go straight to profit. So entering here long. Now this probably, let me see how big this candle was here. 37 pips candle, this yellow one. So stop loss would have gone a little bit below that. This would have been like, as far as risk to reward goes, 1 to 1.4, like 1 to 1.5. It did break out a little bit. So like 1 to 1.5, but it did go for 63 pips. But not, obviously, though, when we zoom out, it went for much more than that throughout the rest of the week, and it's still going. So this thing really went on a tear. But again, for now, I'm only teaching ranges. I'm not teaching necessarily to anticipate this. All right, can you see how it's still going? The trend is obviously long for now, but yeah, that was another momentum trade. Okay, so that was a Thursday range, Monday payday. All right, but after 2 days, this range here is null and void. So that was that one. Next, let's go to New Zealand yen for another long momentum trade. This range, where's that coming from? We're going to put that there. Was on Monday, this Monday, which was the day before yesterday. So it would have had until today to pay out. And it did right here, as you can see. All right. And even if range candles have these wicks, that doesn't matter. Okay. Total range. Okay. The body of the range was 67 pips. The total range was 115 or so, 114, 115. All right. So again, we let price consolidate below the range and then close back inside of it, which it looks like it did right here. And that was at 1 p.m. on Tuesday. So I don't even have to drop down. I could tell right here that this would have been our entry right there, because this 4-hour candle closed inside the range. 4-hour closes inside the range can be very powerful. All right, so instead of dropping down to a 15-minute or a 1 hour, if you can get a 4-hour close back inside the range after close breaks out of it and then closes right back inside of it, yeah. And it also created the low of the week as well. We love to see that. And this went for 129 pips up to the top. So that would have been pretty awesome. In terms of risk to reward, that would have been good for okay. So our stop loss would have went below the low here. Top of the range there. 1 to 2. Okay. A little over 1 to 2, maybe 1 to 2.5. So that was good. Risking 46 pips to get 110. Not bad, not bad at all. All right, so let's go to some winning shorts now, and then we'll be done. All right, so this was another momentum trade. This was on dollar yen. So the range came from Tuesday. This was a 1 p.m. range on Tuesday. The candle body was 106 pips. Just paid out today. This one is ideal because, I mean, if they pay out ASAP, hey, we'll take it. We're just straight up and then straight down. We love to see it. You don't have to see all of this, like all of this type of consolidation. I'm sorry, this down here, all that. You don't necessarily need to see that. But let's keep going. Dollar yen. All right, so best entry, the close inside the range. If we drop down to a 1 hour, you could have entered here. This was at midnight on Wednesday. So, I mean, if you're up, that could have been yours right there. And remember, with momentum trades, you want to set your stop loss. You have two options. You can set your stop loss above, like just the peak, like above that right there for 41 pips, or if you want to keep it a little tighter, set it right above the candle that broke back inside the range. So this candle, let me make this bigger so you can see. Minimize that. The candle that closed inside the range is the one you want to put your stop loss above because you're expecting a straight rise or a straight drop. So after this candle right here closed, okay, this is the candle. Let me put an arrow on it just so you know exactly which candle I'm talking about. This, and there were a few, but this candle right here closed inside the range, closed below this red line here, top of the range. Boom. So then you enter, and your stop loss will just go above this candle. So this would have been a 19 pip stop. So if I go back out to the 4 hour, take profit, that would have been a 1 to 5, 1 to 5.6. Okay, you're risking 20 pips to get 109. You can't beat that. Okay, you can't beat that. All right, and that's our momentum. And like I said, I'm not teaching a straight breakout to now you're expecting price to just keep going down. No, I'm not. Just, you know, if you can get 100 pips off one range, that's more than enough. You don't have to be too greedy and feel like you got to get 1,000 pips every time you take a trade. All right, so the next one, next swing short, we had a momentum trade here, still dropping, but this was Swiss yen. Range came, like I said, these were all this week. It's Wednesday. Week isn't even over yet. But once a range pays out, I don't trade it again. So these pairs here, I'm not even going to look at anymore for the rest of the week. But this range here came on Tuesday, which was just yesterday at 1 p.m. The body of the candle was for 124 pips, so that's definitely more than enough. Now, this right here is a traditional money candle. I'm pretty sure I didn't take this. But see how I poked above the range and closed inside of it? See, I would have went short there to see if this range is going to hold out. But remember, if you're going to take a money candle trade, price needs to stay inside the range. So what shifted it to a momentum trade was the fact that it closed outside the range. So now at this point, you need to see a range, you need to see it close back inside the range. Now, this moved fast, so let's see if the 1 hour gave us a good setup here, and it did, with an initial close back inside the range, which was right here. Right there, that was at 6 a.m. today. All right, so our stop loss goes right above the candle that broke the range. So that would have been about a 30 pip stop loss. Take profit goes at the range bottom right there. So that would have been about a 1 to 4 risk to reward ratio. You're risking 30 pips to make, there we go, 127 pips. All right, so that's pretty good in my book. All right, so that was that. And last but not least, euro dollar. Okay, for winning, this should be in the longs. I don't know why this is on the shorts. We're going to put that up there. Okay, but it mirrored the pound dollar basically. Same premise. All right, so we have our, let's go here. Range, let me see, was it Thursday? Yeah, Thursday of last week. Okay, a 5 a.m. range, London session range. Just let it consolidate a little bit and then let it close. I don't have to really drop down to a lower time frame because we can see here the 4-hour closed at 1 a.m. I'm sorry, at 5 a.m. There was a close inside the range. That's your entry right there. So the long is at 5 a.m. And this was good for, as far as the range goes, it was good for 65 pips to the top of the range. Take profit. Let me see what the bottom of this candle would have been. I'm sorry, stop loss. It's been about 42 pips. So that's good for about 1 to 1.5. All right. So thus far this week, we've had 4 good momentum trades going long and 2 going short, which is they're both basically the yens there. And that's it. Okay. So momentum trades are ideal if candle range, the money candle, your first money candle here doesn't play out. But still follow the pair. Okay. And see if it closes back inside the range. And if it does close back inside the range, keep your stop losses small. Remember, stop losses are like car insurance. Okay, you wouldn't want to drive without car insurance. You hate paying it, but it keeps you driving. So stop losses, you hate taking them, but it will keep you trading. Use a stop loss. Okay, you have to have an invalidation zone to know, okay, if price goes here, I was wrong. I'll keep my money for the next trade. All right, so appreciate your time and attention and watching. For more videos, definitely check out all the links in the description and the other videos on the channel, and have a great rest of your day.